Alright, folks, I got a new video for you. Poking a little fun at some of the yahoos that think raising the minimum wage is a good idea. It's not a good idea. It's already at $9.95 an hour, and honestly, me and my wife could both live on minimum wage. We're both working full time because we control our costs. But this video is not about me. It's about the Bernie Sanders idiots and the Democrats and liberal progressives that think that just, well, we'll pay them more money to flip burgers and to do whatever entry-level tasks need to be done. We'll just give everybody a nice bump in their paycheck. That's fallacious reasoning. And if people that were in charge of raising the minimum wage actually understood economics, and I'm not a scholar, I'm not even a college graduate, but I've been in business, I've owned a business, and I learned the hard way how to look at a profit and loss sheet, what goes into the cost of goods sold report, and I understand that if your payroll expenses go up, it increases your cost of goods sold, which increases the cost of your widget. Pardon me, I can't seem to get through a video without coughing. But at any rate, there are a bunch of Bernie Sanders idiots and the socialists of his ilk that they want to be do-gooders. And I've got the heart as big as Texas. You know, I'm a real charitable guy. But I give intentionally. I don't just give to, well, never mind. It's not about me. Anyway, in order to support my opinion that raising the minimum wage is not a good idea because it increases the cost that the poorest Americans pay for their stuff. You see, this is going to impact the businesses that employ the most people that were on or are on that minimum wage. If you're going to buy a service from a computer company, those guys aren't making minimum wage. So those prices won't necessarily go up. The cost of a computer may go up. Of course, if it comes from China, it won't go up because they get $1 a day, right? So it's the things that, well, think about it. You got your McDonald's, and Burger King, Sonic, all those places pay minimum wage. The convenience stores, hotels, restaurants, what other places can you think of that employ folks at minimum wage or near minimum wage? Each time you go to those establishments, you're going to pay more. So if you're a poor person and you want to buy cheap food, you're liable to go to a fast food restaurant. So if you're making minimum wage and all of the food that you had to buy through the window of your car goes up by 30 or 40%, your buying power has decreased, even though your earning power has increased. Anyways, let's get to my example. We've got a company that makes widgets, and this company has a facility, pays all the necessary bills to maintain the facility, you know, insurance and taxes and all the utilities. They bought all the machinery, so somebody's gone to a lot of expense to start this business and get it established. They've hired salespeople and marketing people, and they've got staff people that do the accounting and the payroll, and they've got people that do accounts payable, accounts receivable. They've probably got a nurse. They might have an admin person. And all these people are there to support the folks that actually make the widgets. So you have direct labor costs that go into making your widget, and you have indirect labor costs that go into making your widget. Those go into your cost of goods sold. And that's the only component of this, your accounting report that I'm looking at, is the cost of goods sold. That number then goes into your profit and loss statement. But again, folks like Bernie Sanders have never held a real job. They've never looked at a profit and loss statement, so they don't know. They don't understand. Your progressive, liberal mind, socialist, communist, pinko, Nazi, bleepity bleep bleep bleep, they don't know because they've never held a real job. They've never tried to balance the books because they're always spending somebody else's money. If you run out of other people's money, then you either find a different way to get it from them or forcefully take it from them. Anyway, in my example, I've got a company that sales are about, let's just say, $1.5 million per year. So in the initial example, you got people making $9.95 an hour. You've got indirect labor, which is $13,000 a year, and you have direct labor, which is $405,000 a year. And then, you make all your widgets, and your cost of goods sold is $1 million for the year. Then once you've hiked up your minimum wage to $15, it's at $5 and a nickel for you Bernie Sanders idiots. Your direct labor cost goes from $405,000 a year to $610,000 a year. That's pretty much a 30% increase. Or actually, I guess if you could call it a 50% increase, because $200,000 is half of $400,000, right? So direct labor has gone up by that factor, and you've got your indirect labor that goes up by almost $7,000. It goes from $13,000 a year to $19,595 a year. Now, stay with me, Bernie Sanders idiots. I know you have a hard time focusing on something that's not real shiny. You see the glare on my glasses, pretend that's shiny. So what this means, to make this digestible for all you people with the attention span of a gnat, you've increased your cost of goods sold by 21%. And that's conservative numbers. This is just a number. Number's a number. It doesn't matter if you spin it or not. It's still that number. So if you've increased that by 21%, you've got to pass that increase on to whoever buys your widget. So what happens, it's a two-edged sword, because not only has my payroll tax or my payroll burden gone up, my cost of goods sold has gone up, your taxes are even going to go up, because if you're paying more in wages, they're paying more in taxes. You didn't really think about that, did you? Hope you guys end up in a higher tax bracket. Anyways, so you got to pass that additional 21% on to your customer, but also the people that you buy things from to make your widget, your vendors that sell you, if you're buying plastic or you're buying a part that's partially manufactured that goes into your widget, the cost of that item is going to go up by at least 21% as well. So you increased your payroll, your cost of goods sold, and you're increasing your manufacturing, your raw material cost. So you've got a double whammy, if you will, to use a technical term. So what happens is that stuff goes directly to the consumer, and what you've done is you end up essentially nullifying the increase because you're paying more for everything. You haven't achieved anything. You've added an extra zero to your paycheck or something like that. And I know that's not true. You're not really adding an extra zero. You've gone up by 30%, right? So you end up costing the people that need the money the most more money for the cheap crap that we produce for the masses. So it's not going to be a good thing. It's going to hurt people. It's not what you think at all. So I guess you can put that in your pipe and smoke it. I'm out.